markets have a casino characteristic that has a lot of appeal to people, particularly when they see, like I say, people getting rich around them. And those who haven't been through cycles before are probably a little more prone to speculate than people who have experienced the outcome of wild speculations.
Desire of people to gamble, and they gamble in stocks, incidentally, too. Day trading, I would say, very often came very close to gambling as defined. But people like to gamble. I mean, if the Super Bowl is on, or even, well, better yet, if a terribly boring football game is on, but you don't have anything to do, and you're sitting there with somebody else, you're probably going to enjoy the game more if you bet a few bucks on it one way or the other. As you know, I mean, we insure hurricanes, so I watch the Weather Channel, but it can be exciting. But people, the human propensity to gamble is huge. Now, when it was legalized only pretty much in Nevada, you had to go to some distance or break some laws to do any serious gambling. But as the states learned to, what a great source of revenue it was, they gradually made it easier and easier and easier for people to gamble. And believe me, the easier it's made, the more people will gamble. I mean, when I was, my children are here, and 40 years ago, I bought a slot machine and I put it up on our third floor. And I could give my kids any allowance they wanted as long as it was in dimes. I mean, I had it all back by nightfall. I thought it would be a good lesson for them. And now, they weren't going to Las Vegas to do it, but believe me, when it was on the third floor, they could find it. And my payout ratio was terrible too, but that's the kind of father I was. But gambling, people are always going to want to do it. And for that reason, I particularly think that access, in terms of friendly gambling or anything like that, I'm not a prude about it. But I do think that, to quite an extent, gambling is a tax on ignorance. I mean, if you want to tax the ignorant, people who will do things with the odds against them, you just put it in, and guys like me don't have to pay taxes. And I really don't. I find it kind of socially revolting when a government preys on the weaknesses of its citizenry rather than acts to serve them. And believe me, when a government sticks, when a government makes it easy for people to take their Social Security checks and start pulling handles or participating in lotteries or whatever it may be, it's a pretty cynical act. It works. It's a pretty cynical act, and it relieves taxes on those who don't fall for those, or who aren't dreaming about having a car instead of actually having a car, or dreaming about a color TV instead of having one. So it's not government at its best, and I think other things flow from that over time too. Charlie?
Yeah, I would argue that the gambling casinos use clever psychological tricks to cause people to hurt themselves. There is undoubtedly a lot of harmless amusement in the casinos, but there's also a lot of grievous injury that is deliberately caused by the casinos. It's a dirty business, and I don't think you'll find a casino soon in Berkshire Hathaway.
And this is really important to understand. In the last couple of years, the stock market is it's always been a combination of a casino and when I talk about Wall Street, I'm talking about the whole capital formation market, and trading market, et cetera. But the market has been
extraordinary. Sometimes it's quite investment oriented, kind of like it always you read about in the books and everything. What capital markets are supposed to do, and you study it in school and all that. And other times it's almost totally a casino, and it's a gambling parlor, and that existed to an extraordinary degree in the last couple of years, encouraged by Wall Street, because the money is in turning over stocks. I mean, people say how wonderful you've done if you bought Berkshire in 1965 or something and held it, but your broker would have starved to death. I mean, it's Wall Street makes money on one way or another, catching the crumbs that fall off a table of capitalism and an incredible economy that nobody could have ever dreamed of a couple hundred years ago. But that they don't make money unless people do things, and that they get a piece of them. And and they make a lot more money when people are gambling than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine. That's who you may not say that you'd want that person. You'd like the other kind of person too, maybe, but that's where you make the money.
When in any system, Keynes wrote about this in 1936, I think it was, in the General Theory, or 35, I think it's chapter 12. It's great chapter on investing, and he talked about investment and speculation and the propensity of people to speculate and the dangers of it, and worded eloquently. There's always the possibility of, there's always some speculation, obviously, and there's always some value investors and all of that sort of thing in the market. But when speculation gets rampant, and when you're getting what I guess Charlie would call social proof that it's worked recently, people can get very excited about speculating in markets, and we will have it from time to time in this market. There's nothing more agonizing than to see your neighbor, who you think has an IQ about 30 points below you, getting richer than you are by buying stocks, and whether it's internet stocks or whatever, and people succumb to it, and they'll succumb in this economy just as elsewhere. There's also a point which gets to your question. I would say that early on in the development of markets, there's probably there's some tendency for them, I think, to be more speculative than markets have been around for a couple of hundred years. Markets have a casino characteristic that has a lot of appeal to people, particularly when they see, like I say, people getting rich around them. And those who haven't been through cycles before are probably a little more prone to speculate than people who have experienced the outcome of wild speculation. So basically in this country, Ben Graham was, in the book I read in 1949, was preaching investment, and that book continues to sell very well. But if the market gets hot, new issues are doing well, and people on leverage are doing well, a lot of people will be attracted to not only speculation but what I would call gambling. And I'm afraid that will be true in the United States. And I think that China, being a newer market, essentially, in which there's widespread participation, is likely to have some pretty extreme experiences in that respect. We will have some in this country too. Charlie?
Well, I certainly agree with that. The Chinese will have more trouble. They're very bright people. They have a lot of action, And sure, they're going to be more speculative. And it's a dumb idea. And to the extent you're working on it, why, you're on the side of the angels, but lots of luck.
Well, it will offer the investor more opportunities, actually, if they can keep their wits about them. If you have wild speculation, I mean, Charlie just mentioned earlier, if we get into periods that are very tough, Berkshire certainly will do reasonably well because it won't, and we won't get fearful, and fear spreads like you cannot believe until you've seen a few examples of it. At the start of September 2008, you had 35 million people with their money in money market funds with $3.5 trillion in them, and none of them were afraid that that dollar wasn't going to be a dollar when they went to cash in their money market fund. And 3 weeks later, they were all terrified, and 175 billion flowed out in 3 days. And so the way the public can react is really extreme in markets. And that actually offers opportunities for investors. People like action and they like to gamble. And if they think there's easy money to be made, a lot of them, you'll get a rush to it. And for a while, it will be self-fulfilling and create new converts until the day of reckoning comes. So just keep preaching, investing, and if the market swings around a lot, you'll keep adding a few people here and there to a group that recognizes that markets are there to be taken advantage of rather than to instruct you as to what is going on.